Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin / cryptocurrency update for Monday, May the 4th. So before I jump into this content, please do me a huge favor, hit that thumbs up button. Don't forget to subscribe to the channel, and make sure you check the description for a link where you can join the Patron for just $4.95 a month. Quick reminder that Patron is going to be changing the price from $4.95. It'll go up over the next week or two. I haven't decided exactly when, but we're not getting to the target, which was $1,000 a month to guarantee 3 video updates a week. We've been stuck around $500 for a couple of months now, so gonna bump that up a little bit. But if you want in, you can get in now for just $4.95. So let's talk about Bitcoin. Let's talk about the market as a whole. We'll talk about the stock market just a little bit, and let's kind of get some levels drawn out that we can look at trading, over the coming week. All right. So first things first, the weekly closed. It closed yesterday, obviously, and there was basically a trend line that I had been watching, a line that I thought might act as resistance. It was this line here, started on this touch and then hit this touch. That line could still be valid. I'm not going to rule that out, and if so, we closed just above it. Okay. The reason that I redrew this wasn't to fit my bias, because I'm going to talk about the bullish case here in just a few minutes, but it's because you don't really know which trend line is valid until after you get enough touches, right? 2 touches will start your trend line. 3 touches is better. This one had 2, so I was looking for a 3rd touch. I didn't get it. It went right through it. However, I did get a 3rd touch on this upward sloping green line that started here, here, and now here. And if I redraw this to where I use this earlier point, it had a touch here, it acted as support here, had a little outlier, touch here, and now look, it's a perfect convergence here. So that probably is the line, but I can't say that for sure, right? It's a little iffy there, and the reason it's a little iffy there, or not really the reason, but because it was a little iffy there, I wasn't in any hurry to jump into some kind of positional short, right? If this had closed exactly the way I wanted and the smaller timelines had confirmed it, I would have opened a position short, which is different from a swing short or a day trade, right? Swing short might be, hey, I'm going to catch this move over the next 12 hours, in the next 3 days, in the next few days, right? A positional short is, hey, I'm going to catch this move to the next lower low, right? Which in the case of Bitcoin could potentially be under $3,800. I didn't, see that opportunity, so I didn't do it. All right. So I'm still watching, and I think the weekly chart could absolutely go either way. Okay, when you're sitting right at support like that, or right at resistance like that, usually I want to short it, but not in a case where I don't know which trend line is the correct trend line. All right. Also, you can see it's peaked outside of the bear market box, so it's a little sketchy on the weekly. Plus, the volume kicked up last week. Now, it's still not as high as it was back here, but you do have to keep in mind that it's a lot higher than it was all through here, right? If you look at this, the last time volume was up at those levels was back in the summer of 2019. So this could absolutely be a breakout type of situation. It's a little concerning to me, right? If I wanted to get bullish, it's very concerning to me, actually, that we've now put in 7 green weekly candles in a row. You guys remember last month I was saying, yeah, I don't think we're going to put in 3 green candles. Well, we did. Well, I don't think we're going to put in 4 green candles. We did. And then I stopped saying it because it was like, holy hell, I don't know what we're doing, right? 5, 6, 7 green candles now. So this thing is now pumped up off of the March low. It's up more than double. It's actually peaked out at about 145%. So whether you're bearish or bullish, if you long there, you made out like a bandit, and congratulations. It was an awesome trade, right? I didn't long that whole move. I've talked about it in past videos. I took out some longs down around 4,500-ish, and I started taking profits between 6,200 and 6,900. I didn't expect it to go that high. I thought we could get a pump up to around 8 grand, which was the 200-week moving average, the 61.8 Fibonacci level, all those things, but it blew right through it. And that's trading sometimes. I don't typically trade against the macro trend, which is, some people do, some people don't. I'm, in a downtrend, I'm typically not going to take, long positions, except on an intraday level, like an hourly chart, a 5-minute chart, etc. So, usually in the past, that's what you wanted to do. You didn't really want to long bear market rallies, but this market has been a lot different from previous, markets with Bitcoin. And I tend to believe it's because the CME is involved, and I think they're playing games, right? I think they know that they can pump this up and get people to FOMO in over and over and over again, and they've been doing it left and right. So maybe I should have been, longing these rallies, which is, fighting the trend after all. But anyway, for now, on a weekly chart, we're still in a downtrend, but the volume is upticking, so it's really important to watch that. Also, we're above the 19-week moving average, which is kind of a line in the sand that I use, right? Well above it, chopped right through it. So I've got to say that while we're in a structural downtrend, there's some bullish stuff on that chart that made me a little bit hesitant to open a positional short, okay? Let's jump over to let's do a 3-day chart. I haven't looked at the 3-day chart today, but I was looking at it a little bit yesterday, so I have some idea of what it looks like. So this is a 3-day chart. We have basically, we look at price first. We have these two lines, the red line and the green line. So the red line is a resistance line drawn from the highest close in 2017 to the highest close in 2019, and it gives us that downward sloping red line. You can see that basically on the previous candle here, we came up and tested that and got pushed back down. It was cliche resistance. Okay, the green line is actually the trend line or the resistance line from the highest point, the wick, in 2019 to the highest point in 2020, which was this wick here, before this, obviously. And again, we came up to test that. Now, that's not drawn with any sort of bias. It's just that it fit the chart a little bit better. If we draw it from close to close, you can see that it's about the same, right? You've got close here, highest close here, and it looks like, probably maybe even a little bit better line, right? It looks like perfect resistance. So it's just general area of resistance, right, from 2017 to 2019. If we were to break through those and close above them, I think that says something. I don't necessarily think I would want to jump into a long just because of that one reason, but it certainly would be interesting because in Bitcoin's past, this is what's happened. It's had these long downtrends, not this long, obviously. This downtrend has now been going on for almost 2.5 years. But when it finally breaks out of its longer downtrends, right, it tends to really start its new bull run. So that could be what's happening. So that's worth watching. If we look at the RSI, we're well outside of the bear market box here, okay? But this box, which was so profitable to trade in the latter part of 2019, it really lost its, its oomph, if you will, over the last 3 or 4 months. It broke out here, came down and found support on top of it in January, and then went up, right? Then came right back through it, found resistance here, but dumped way through the bottom of it. So bottom didn't act as support. Then we have resistance here, little stutter step. Had the hiccups, sorry about that. So we had a little stutter step, found support. The downward sloping line offered some baby resistance, right? Actually dropped from around 7,400 all the way down to about 6,400. So really nice short opportunity. Sliced right through everything else though, right? And now we're back up at this green line. So this was, support here, resistance, support, resistance. So maybe this acts as resistance. It looks like it did last week, right? I didn't short base on this. There's so many lines right now on the 3-day RSI that it's kind of like, well, shit, it's going to hit one of them, right? So I can't really put a whole lot of faith in them because they're all over the place, right? Until I get a better clean line that I feel really good about, I won't be trading the 3-day chart for a while, okay? This could absolutely look more like this, right? It could be that this ends up being the line. That's what I'm saying. They're just everywhere. And you don't really know which one to trust because at this point it's just a mess. So 3-day chart, the only thing I can really say is, I talked about this a few weeks back that this is definitely an uptrend on the 3-day chart. While it's not on the weekly yet, you do have high, low, higher low, higher high. Okay. Could this be an Elliott wave? I don't know. I don't trade Elliott waves, but it could be, right? It seems to make sense. Although I think there's a rule that says it can't come back down into wave 1, so maybe not. But, overall, it's an uptrend. Up, down, up, down, up. Okay. So for this to turn back into a downtrend on the 3-day chart, it really has to either do one of two things. It's got to go way down here and break this old low, right? Or it can do something like this where it goes low, lower high, lower low, lower high, lower low, something like this, okay? Typically, we see something like this before the move down. Look, right here it did it. See this? So you had an uptrend. Everything's going good. You came down. Still looks like an uptrend. And then, lower high. Things are getting a little scary. Boom, lower low. Trend reversal. Lower high. Crash. Okay? So this is what we want to see if we want to see Bitcoin go lower. We want to see, lower low, lower high. As long as we're seeing higher high and higher low, I don't think you can bet against Bitcoin, guys, right? And people confuse this all the time. They're like, you're a bear. Well, yeah, we're in a macro downtrend, so of course I'm a bear. It doesn't mean that, I think price is going to go down every single day. Like, price goes up even in downtrends, okay? You have to realize that there's always different trends at play. Your trend on a 5-minute chart might not match your trend on an hourly chart. Your trend on a 4-hour chart might not match your daily chart. Your daily trend and 3-day trend and weekly trend, they all might be different, okay? But on the 3-day chart, this is an uptrend. It's definitely an uptrend, okay? And again, if I had it to do over again, if I could go back with the benefit of hindsight, I would probably not rely so much on the weekly chart. I would probably rely more on the daily and the 3-day charts. I just feel like they would have been a lot more profitable to trade, right? In the past with Bitcoin, that wasn't the case. The weekly charts were kind of like the chart to use for position trades. But over the last year, it hasn't been that way. It really hasn't. I've avoided losing money. I've done a great job of capital preservation, but I could have made probably twice as much, maybe 3 times as much, if I was willing to long the macro downtrend using the daily and the 3-day charts. So that's something I will adjust, right? I'm always adjusting and trying to become better. So I definitely will do that. If we look at a daily chart, okay, so this one's a bit sketchy, okay? Whereas the 3-day looks good, the weekly could go either way. The daily chart looks like total butt, all right? If we look at this thing, yes, we are above our 200-day moving average. It's sitting down around $8,000. Yes, we're above the 50. It's sitting down around 7,000. And, it's interesting to note that the 50 is curling up pretty hard here, right? So maybe there's a golden cross a few weeks out. Who knows if the price can, stay up there. What I want to talk about, though, we don't really need to talk about the red and the green line because that is the same resistance that would be on the other charts, okay? So I'm going to take the moving averages off. I'm going to take, we'll leave the red and green there so I don't have to redraw my chart later, but just keep in mind, same thing, okay? These Fibonacci levels, this is the entire move. This is the move from 13.8 down to 3,800. It gives us a golden pocket up around 10 grand. So could I see this going to 10 grand? I could, okay? I want to be very clear about that. I could see it going to 10 grand. Just like this went up to its golden pocket. If we draw Fibonacci levels from way up here, and I probably won't get them perfect because I don't want to zoom in and be all that meticulous, but basically from up to down, right? Here's the golden pocket. It was up around 13.8, 13.5. It was 13.8. I just can't get this on the right candle. Son of a bitch. There. All right, so 13.5. Okay, so it comes up right in the golden pocket and boom, right? Dump. So could we be repeating that? We could. If it's a downtrend, that wouldn't be all that abnormal, okay? But will we get there? Not sure, okay? Check this out. So we've got this yellow line. This is the halving. This is on May 12th. It's literally 8 days away. So this, historic event, this super bullish event that we've all been hearing about now. People were talking about this in 2017, right? So for 3 years, we've been waiting for this event. And here it is. It's finally a week away. Historically, that has been a buy the rumor, sell the news event, meaning price pumps right before the halving and then dumps right after the halving, okay? People always talk about, it kicks off the new bull run. That is not how it works exactly, okay? Typically how it works is you get a pump right before, you get a dump right after, it consolidates a bit, and then the bull run starts, okay? In the case of Litecoin, we already saw this last year. You might not have been around for the last Bitcoin halving, but chances are you probably were here for the last Litecoin halving. Price ran up from around $22 per Litecoin up to $146 per Litecoin, and then it dumped all the way back down to $25, Okay, took it a while to get there, but as soon as the halving happened, it dumped. I mean, it dumped huge. Okay, down to like $70 or something. So Bitcoin is the same way. It typically pumps and then it dumps. And when you get a huge pump like this, it's very, very suspicious because, like I talked about in previous videos, now we have a brand new liquidity gap, right? And these are the gaps that, you know, a lot of the talking heads on Twitter were trying to say, oh, they don't matter, when I said for 9 months that we would go back to $4,000. Oh, you're crazy. You're going to be buying all-time highs. If you're waiting on that, you're going to be buying all-time highs, right? This liquidity gap back here. There's people in my Facebook group, you don't know what the hell you're talking about. Gaps don't matter in crypto, right? People that left the Facebook group saying I didn't know what I was doing. But look, they fill almost every single time. There's a few exceptions, a few outliers. There always are. But I'd say 95% of the time they fill. And look what happened. Boom, right down to filling that gap. So all we've done with this weird pump is create a brand new liquidity gap. And not just this one. We created one down here, right between that level and that level. This next candle didn't come back down and retest the old high. So now we got a liquidity gap down around $5,400 and up here around $8,400. Okay, so those are bearish in nature, and considering the halving is right here and it historically dumps, a little bit sketchy. Then you look at RSI and it's like, oh man, what's going on here? Okay. So lots of writing on here. Let me explain this. First things first, we have hidden bearish divergence. We have RSI from February 12th all the way over to April 29th. RSI is putting in a higher high, but price is putting in a lower high. When you have a downtrend and you have a lower high in price and a higher high in RSI, that's called hidden bearish divergence. And it's a sign that the trend is getting ready to continue. The downtrend is going to continue. All right, so that's very bearish in nature. The next thing we have is we have this double top trying. The key word here is trying. That's why it's capitalized. Trying to form, okay? This is today's candle right here. So if this can pump up and close above this purple line, that will not be a double top. And guess what happens when double tops don't become double tops? If it goes up and comes down and goes up, and instead of becoming a double top, stops right here, when it goes back up, not a double top, it's a double bottom, okay? So you have to be really, really careful saying, oh, it's a double top trying to form. I'm going to short this just because of that. Because if this bounces up, it won't be a double top. It'll be a double bottom. It'll be the exact opposite. It'll be a bull sign, okay? So we have to wait for the daily close. And if it closes below this purple line, that's a double top, which is a reversal signal. It signals that the trend is ending and getting ready to change course. Also, if it closes anywhere below that purple line, it's going to give us a confirmed, right now it's unconfirmed, it will give us a confirmed bear divergence, not hidden, but a regular one, where price from April 29th to May 2nd actually made a higher high, while RSI made a lower high. Technically, some people would say it's already confirmed because it's already put in a lower candle, right? But I don't want to jump the gun on it. What I'd rather do is just wait for this to come back down and close below this purple line before I, decide to get into a position, right? And again, we're talking about a swing position or a position trade, one of those two. We're not talking about day trades. Day trades happen all the time, okay? That's what I'm watching on the daily chart. And there's a lot there to take in. The thing is you have to remember that, there are always opportunities. You don't need to take every single trade, and you don't need to take every single opportunity. If something feels off or something feels sketchy, right, then there's a good chance your gut is trying to tell you that, hey, this is probably not a good trade. You might not want to take this. Now, it's a little wishy-washy there because I'm not a big fan of trading off your gut, but sometimes when you're first starting out, your gut knows better than your brain, right? You're wanting to fumble into a short or fumble into a long, and your gut's telling you not to, and sometimes it's better to listen to your gut, all right? But that's what I'm saying on the daily chart. So what I want to do that's a little bit different is I want to zoom in a little bit because I want to show you guys some smaller time frames as well, all right? So what I'm going to do is we're going to look at a 4-hour chart, all right? On a 4-hour chart, we're actually going to fairly easy to see downtrend, okay? So we had our uptrend, and then we came down, higher low, everything is all good, lower high, first sign of trouble, higher low, okay, trouble's over, and up we go. W, right? Looking good. But then this happened. Low, lower high, lower low, lower high, lower low, so far lower high. Okay? So if you want to get bullish, what you want is you want to see this come up and break this old high, and then you've got higher high. And if that happens, then you can start watching for something like this on the 4 hour. Okay? Problem is your RSI is getting ready to come up to the same resistance line. So it's going to have to break through and close above this to get this higher high put in. If it can't and it stops right here, okay, that's a sign that you're probably going to put in a lower low, okay, which is just more downtrend. So that's something worth keeping an eye on. Also, if you zoom in even further and you look at a 1 hour chart, okay, first things first, I don't know if I talked about this the other day or not. Hopefully I did. Maybe I didn't even shoot a video. I don't remember. But there was some beautiful short opportunities in here. And this is playing out just like October did, right? It went up and hit the 61.8 fib, and then it chopped around for a while before finally, falling apart. And this is what I kind of predicted would happen on, I got an alert, let me know not to forget to watch the hourly close. This is what I predicted would probably happen, right? Get this high in there, chop around a bit, and then wait before we know what's going to actually happen. So on the hourly, we have the line that I'm interested in. It's not this purple line, okay? This purple line was touch, 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 and it played out beautifully right here. You can see it came up, acted as resistance, and then it dumped from around 8,900 all the way down to around 85 something, right? So nice, like 4 or 5% dump. But now we're above it, okay? Looks like it wants to be support here. What I'm watching is this green line, okay? If it can break through this green line, I think it will invalidate that M on the daily, okay? I think it'll go back above that M if it can break through this green line. And if it can break through and close above that green line, I think it'll break through and close above this green line. And then, all that stuff on the daily, all that bearish stuff, right, could end up invalidating that bearish divergence, could end up invalidating that double top. And if it goes high enough, way back here, and closes higher than 10.3, it'll invalidate the hidden bearish divergence. So smaller time frames are going to be a pretty key thing today. All right, this candle is going to close in about 8 minutes, and you can see that right now it's trying to close on top of that old level of support. So I think it's exciting. I think Bitcoin is in a really exciting time, and all this volatility has offered a lot of opportunity for people that are trading. Okay, if you're a hodler, stuff like this isn't all that fun to watch, because you're going up and down, up and down, up and down. You don't know, what's happening. But if you're trading this stuff, this is money, right? This is how traders make their living, is through stuff like this. It's not like this. This tiny chop didn't offer a whole lot, but this is big chop, right? You get a big range to play on these trades here. So pretty exciting. All right. But here's what I would mention. And before I wrap this video up, I'm going to look at a couple more charts. Here's what I would mention, guys. The stock market took a beating over the last few days. And I talked about this, I know. It broke outside of its rising wedge, and there was a rising wedge on RSI as well that I've taken off there, well outside of it. We've got to be careful getting too bullish, because I don't care what anybody says, their correlation is very, very strong. I saw an article not too long ago saying that the volatility between Bitcoin and the S&P 500 is the lowest it's ever been. Right? That means there's a high correlation. That's what that means. So I'm watching this. I'm wondering if this RSI is more of it. So the wedge looked like this, right? I'm wondering if it's more of a channel, like an upward sloping channel, possibly. You can see it's got some beautiful touches up top and a couple touches down bottom. So I'm thinking it's more of a channel. I want to watch it if it can get down to this bottom level. I want to watch what it does down there. The problem is on price, this is a pretty clear rising wedge. And this purple level is kind of like the last level of support. It's already fallen out of the wedge, but it's not confirmed yet. If it closes underneath this purple level, then what you have is a double top, okay? And you have confirmation of a lower low. And in that case, I think the stock market is done with this fake pump that's been Fed printed, okay? And if the stock market starts to dump, because Bitcoin has shown correlation with it, I think Bitcoin will go down with it. All right. Now, there's been some confusion lately, and I've said this, I know, multiple times. I'm going to point it out again, because somebody on Twitter was talking about it earlier, and it gigs me a little bit, right? I am not rooting for the stock market to crash, okay? It is not what I'm rooting for. What I see in the chart is not what I want, right? My bias for the stock market is bullish. I want the stock market to go up. It's good for people, right? It's good for people I don't know. It's also good for my family. It's good for me, right? When the stock market goes up, your investments, your long-term investments go up. If the stock market crashes, long-term investments go down, the economy goes down, people lose money, people lose jobs, people die when the stock market crashes, right? There's actually like actual studies and research that shows a correlation between, bad economic times and higher, death rates, of course, higher abuse rates within homes, domestic abuse, suicide, depression. I mean, all this stuff goes up when the economy goes down. I'm not a freaking vulture, right? I'm not wanting it to go down so I can get paid. It's not worth it to me. I'm just telling you what I see in the charts. The chart looks like shit. It looks terrible. Okay? It does. I can't paint a picture that isn't there. The chart looks terrible, right? And because that chart looks terrible, it makes me think that Bitcoin is probably in for rough times as well. I do not see a scenario where Bitcoin is pumping, going to new all-time highs, and the stock market is crashing. I just don't, okay? It's possible. Anything is possible. Let's take a quick look at the CME. So the CME actually had a gap. It was only a 4-hour gap, not a daily gap, but it did have a 4-hour gap. It was right here, okay? So basically between here and up here, it's hard to see now. I'll make these lines yellow so they stand out more. So this is where it was at. And just so that's a little easier to see, I'll put it on replay mode. Look like this. Now, shoot, I didn't go far enough back. Hang on, I'll fix it. I don't know why the gap's not working on the CME. Anyway, this opened way up here. It closed over here, so there's this gap. You can see, boom, it's filled in now. And you can see the top of that gap is now acting as resistance. Okay, that was, again, just a 4-hour gap, not a daily gap. If we're looking at a daily chart for the CME, what I see is, a liquidity gap here, but no real, gaps, except up here at 11,695 and 11,795. There is still a gap up there. Okay, so that's the one gap that still lives on the daily chart on the CME. It's the only gap that I know of that's there. Now, people have asked me, hey, isn't there a gap at like 3,500? There is, but it's only on a 4-hour chart. Okay, it's not on the daily chart. And just so you guys know where that's at, it's way back here. It's a fairly small gap. It's about a 1% gap. But no, I'm not writing it off. I'm not trying to say it doesn't matter. It does matter, but I don't think the 4-hour gaps matter as much as those daily gaps. Okay, so that's where it's at. It's way, way down there. I'm not really even looking at those levels right now. Right now, I'm still looking, more to trade the levels we're at. Okay, this was an upward sloping trend line on the 4-hour, so if we break through it, it would be bearish in nature. If we look at a daily trend line, we had a pretty strong uptrend here. That's interesting. If you draw it like this, it actually hit resistance up here, but I want to draw it like this. This is probably the line I'll be watching. It's not all that clear on the CME, right? So I'll probably be watching this line here. Overall, though, I don't see a reason to take a short yet. I don't see a reason to take a long either. The one thing about the CME that I find is really interesting is, do you see where it's finding support at? It keeps finding support on top of the 200 daily moving average. Okay. I think it's worth noting that the last time that acted as a level, we bounced right off of it. Okay. This time we're above it. So if we bounce off of it, it could go a lot higher. That's why I'm saying I don't want to get into a positional short. I just don't see it. I mean, do I think it's going down? I think it's going down, right? My gut feeling is it's probably topped out, but you can't trade. You can do whatever you want. I don't trade gut feelings because then I don't have an invalidation point, okay? If you get into a trade, it's not just about, okay, I want to go short here or I want to go long here. You have to know, where am I wrong at? You have to have a specific level that makes sense, that, hey, if it goes higher than this, it's probably going higher. Or, hey, if it goes lower than this, it's probably going lower. So if you just jump into a short base in your gut, where would you set your stop loss? And the answer is there's no valid place that you would be wrong, right? I mean, I guess you could say, hey, I would set my stop loss at the top of this wick, but that's a 7.5% stop loss. You know, if you're using proper risk management, that's going to be a fairly small trade. And if it's a small trade, it's not even worth it. Why would you want to gamble in the first place? You know, you have a chance to win a small amount of money and a chance to lose, you know, a small amount of money. And then, you know, not really my thing, okay? I don't want to gamble. I want to take very calculated positions. And, you know, because of that, I don't catch every move in the market, but I also don't get burnt, right? I keep my money. So my income or my, returns go steadily marching up. Don't see a whole lot of this, right? But you also don't see a whole lot of this. All my returns. You just see this slow grind up, right? And not even really, I mean, really, it doesn't even curve up like that because it's really just, you know, I mean, they don't really get higher the more I trade. I don't add to my trade budget. Now, if I was doing compounding returns, yeah, my equity curve would look something like that because, you know, I'd be trading with larger and larger and larger and larger budgets. But I don't. My trade fund stays the same, right? It used to do that when I started small, you know, I would add to it. But I'm at a level now where I feel pretty comfortable with the amount I'm trading with, right? It's enough to make a decent living. And, you know, maybe one day my risk appetite will increase and I'll want to increase that budget. But for the most part, you know, I go up, I cash out for bills, I go up, I cash out for bills, I go up, I cash out for bills, and so on and so forth. So here's the thing about trading, guys. So this is an interesting thing, and I'll wrap the video up with this. A lot of people do ask, they say, you know, why do you trade when you could just hodl, okay? Well, for obvious reasons, hodling is not a guarantee, right? So let's just, first of all, let's admit that hodling is not guaranteed, that you could lose everything you put in, okay? If Bitcoin goes to $75,000 or if Bitcoin goes to $100,000, the people who hodl, I haven't looked at the numbers, but I would imagine that they will probably get a higher return than I will trading, okay? Probably. I'd have to look at the numbers, but let's just assume they would. So then the question becomes, well, if you know that, why wouldn't you just hodl? I'm going to tell you right now. Because if I'm we're just going to use imaginary numbers. If I'm hodling $5,000, right, and it goes up, let's just say it goes up 20x for a nice, really easy number, that would put Bitcoin at, you know, I don't know, 100 and some odd thousand dollars, 160 grand. Fine. Okay, so let's say it goes up 20x, and let's say it does it in 2 years. Very, 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 very unlikely that I'm going to get a 20x return trading in 2 years. So you might say, well, why wouldn't you just hodl then? Okay, here's why. Because I'm not trading with $5,000. Okay, let's just say in this hypothetical example, I'm trading with $100,000, which is 20 times as much. Okay, the difference is when I do 100,000, if I hodl the 100K, how much am I risking? I'm risking 100K. Okay, if I trade 100K, how much am I risking on a trade? Well, me personally, I never risk more than 3% on a trade. So the most I'm risking is 3K. You see the difference? I can't afford to lose $100,000. Okay, been there and done that. Can't afford to do it again. Been there and done that multiple times, in fact, both in crypto and in business. I can't keep taking six-figure hits. All right, I'm almost 40 years old. It's time to start putting money away. But I can't afford to risk $3,000. So that's the reason that I trade. Right, my returns might be smaller than Bitcoin. Right, if it does moonshot and go to 150K, they probably will be smaller. But because I'm trading with a much larger budget than what I could afford to hodl with, financially speaking, when it comes to the end of the day, I'll make more money. Okay, hopefully that makes sense. It's a really simplistic example, but you know, that's the reason. And again, you guys got to remember that I do have a small hodl portfolio. Right, it's not a ton of money, but it's a small hodl portfolio. So if it does go up, you know, that's money I can afford to lose. Right, that's the money that I really can't afford. If I lose it, I'll be bummed out, but it won't like cripple me or anything. But the money that I can't afford to lose, I trade with it. Right, and I use proper risk management so that I'm never actually in a position where I'm going to lose all of it, unless something catastrophic happened. Catastrophic meaning like the exchange stole my money or something. Right. And in those cases, you know, I have some risk there, but I manage that risk by using leverage. Okay, so let's just say, again, we're going to stick to this example for nice easy math. Let's say that I want to trade with 100K. I'm still not actually risking, I'm not risking 100 grand on the exchange. If I'm using 3% stop losses max, right, the most I can lose is $3,000. Okay, but the other thing is if I'm using leverage, let's just say I use 20x leverage on an average trade, right, which allows me plenty of room. I'm not going to get liquidated because it would have to move against me like 5%, right, and I'm going to have a stop loss well below that. Well, if I'm using 20x leverage, how much money do I actually have to keep on the exchange? 5 grand in this example. So again, I'm not risking 100 grand. I'm only risking 5 grand. And the worst case scenario, exchange goes down, takes my money. And per trade, I'm only risking, at most 3 grand in this example, which is 3% of 100K. That's why I trade. It's all about risk management, right? Granted, if I was a millionaire and, had millions in the bank and didn't care, sure, instead of trading 100K in this example, I would just stick 100K in Bitcoin and say, hey, let's play the lottery, baby, right? And if it goes to zero, oh, well, I got millions in the bank, who cares? But I don't have millions in the bank, and I can't afford to lose $100,000, so I can't afford to hodl $100,000 worth of Bitcoin, okay? In 2018, that's literally what I did. Was I tried to hodl 6 figures, and I lost all of it, well, almost all of it, right? I went back, most of the coins went back down 90-95%. I was holding a ton of altcoins. So, I trade, and that keeps me safe, okay? And because I can trade with more money, I can see bigger returns, even if the percent isn't as big, right? Even though if I'm not going to get 2,000% in 2 years trading, right? Never going to happen. So, just wanted to point that out. All right? So guys, I'm going to go ahead and wrap the video up there. Please remember that I am just some guy sitting in a spare bedroom, so nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional financial advice from a professional financial advisor before making any type of investment in cryptocurrency or the stock market. If you haven't already, be sure and hit that thumbs up button. Be sure and subscribe to the channel. Be sure and click that bell icon to get notifications when I release new updates. And make sure you check the description for a link where you can join the Patron and support the channel and get more access to more frequent updates. This is James with Crypto Common Sense reminding you to please trade safe.